Welcome back. No respite for the market. It's going to end at low point of the day. That's fairly certain. 85.20 for small mercies. It's going to defend 8500, but will be interesting to see if that gets taken out in expiry week. We have Tahir Basha now joining us from Motilal Oswal Asset Management Company, and of course Dinesh Kumar is also with us from TradeGenie.com. Gentlemen, good afternoon. Tahir, first a word on the market. Is it a good buying opportunity, or is the risk reward still unfavorable?
I think still from a medium to long term perspective, we still feel there is value in the market, although we have to be very selective and optimistic on a selective basis across different sectors and different parts of the market. So overall, I think some of the elements which impart the confidence to the market are still intact in terms of the softness in commodity prices, the possibility of interest rates. I think we need just some favorable outcomes now from probably the Parliament, maybe a slight improvement in the results as well. We've seen a mixed bag up until now. And that should probably contribute. We've also seen flows come back, particularly from the FIIs in July after a couple of weak months. So I think internals of the market are still okay. We'll see a gradual grind upwards. I don't really think there's a significant amount of downside to the market.
Okay, there's no significant downside to the market. Let's find out more on the technical. Siddarth Bhamre is also with us. Siddarth, next week is expiry, so it will be important for traders, and this week has not been great at all, just hanging on 8500 by the skin of its teeth, the Nifty. You expect more downside?
Yeah, this week has been flat, but if I look at the statistics, I don't see any reason why we should expect significant downside in coming week. Reason being, if you look at the week gone by very carefully, day by day, then Nifty open interest is showing good indications that where this market would be moving. So when markets were correcting on the days, we had seen long unwinding, open interest has come down. And when markets were going up, we have seen formation of long positions, which clearly suggests that most of the stronger hands were buying, and this can be seen in FI's data also. In fact, first half of the week, when one day market corrected 70 odd points, Nifty, we had seen FIs buying to a tune of around 1200 crores in index futures with some unwinding, which clearly suggests that some correction in market, some of the FIs who were short have utilized to square off their short positions. Well, I'm not much fan of levels in market, but now what has happened, if you look at May series and June series, it was very difficult for market to cross this resistance zone of 8450, 8500. In July series, in beginning of July only we crossed that. And now if you look at the put options of 8500, last 1.5 2 weeks we have seen huge build up in that strike price, with most of that being selling, because IVs have reduced from 17 odd levels to 13.5 for put options, and most of the stronger hands, especially FIs, we have seen that they have been sellers in index options. So this level of 8450, 8500, which was resistance before, will now act as a strong support, and if at all anybody wants to short this market or want to see any weakness in this market, should see below these levels only.
Okay.
I believe this market may not correct significantly till this expiry. Next expiry we can take call, once we see how are the rollovers and how FIs roll over their data. But I won't short this market at this point of time.
Okay.
Even if in last 2 trading sessions we are seeing some sort of weakness. What we have been doing is last 2 months we haven't generated Nifty specific calls, but we have been giving a lot of stock specific buy calls. But since this week we are getting some sell as well as some buy calls also. So clearly the upside also is not very significant. But those people who are anticipating that before expiry there will be a huge fall, I think again, what I said on Tuesday, that short traders would be disappointed.
Okay, short traders would be disappointed. Stay on with us, gentlemen. We'll just recap the market closing rates and come back to you. The market is going to end at low point of the day, and really the large part of that goes down to ICICI Bank. That stock was down about 4%. That was the biggest loser, also the biggest contributor as far as the market downside was concerned. Wipro and Lupin, bad reaction to earnings continues on both these names. Tata Motors was down 3%, GAIL reacting to numbers down 2.5%, SBI was down 2.5%, Mahindra & Mahindra, Tata Steel, Reliance side of numbers, that stock was down 1.5%, Larsen was down about 1.5%, So really, whichever way you look across the board, Ultratech, ACC, all these stocks were down quite a bit in trade. On the gaining side, you had a couple of gainers like TCS and Tech Mahindra, but honestly not supporting the market much. And of course, as we would expect on a day like this, the mid-cap reversal was quite evident in the second half.
Oh yes, it was. It was majorly, earnings reactions that really undid the stocks. But the stock of the day clearly had to be Crompton Greaves. Very weak earnings. Big losses in the power systems business, and the stock down 5%. You had JP Associates also vying for the top honors there. Care Ratings has downgraded JP Associates ratings, so that stock went in with deep losses today, down about 8%. TVS Motor, by the way, the management is getting ready to address the press, but over there as well, the margins were subpar, below estimates, the top line growth was below estimates, and the stock is down about 5% or so. A couple of other stocks like VIP and M&M Financial also reacted to their weak numbers. So today actually was a day of very weak earnings in the mid-cap space and a lot of selling pressure that we got in individual stocks. But let's cut across and listen into TVS Motor. Well, that's the management of TVS Motor just getting ready to address the press at this point in time. Just to refresh the numbers for you, okay, let's go across.
All our brands, Jupiter, Star City plus Apache, have grown significantly over last year.